Hey everyone, welcome back to the channel. So in today's video, I'm going to share 5 investments that I'm really focusing on for the fall season of 2021. And I'll go into each one and I'll sort of explain my thesis behind each one of these investments, why I'm getting into it, or why I've been investing into it for a while. And so as always, I'm not a financial advisor, just a random guy here on the internet sharing some opinions and some things that come to mind. So let's go ahead, let's get into this video. Now, one thing that I think you'll notice is that my investing strategy has most definitely shifted over the past 18 to 24 months. And a lot of this has to do with the fact that most things are overvalued. I mean, I think we'd be kidding ourselves if we said that there were some excellent deals right now in the market pretty much anywhere. If you look at anything, any asset class, it's been up, fivefold in the past few years, it feels like. And so because of that, I had to change my investment strategy and my philosophy on it a little bit. And I'll explain that further on. It'll make more sense as we go on throughout the video. But one of the first investments that I'm really eyeing up, I own a bit of it right now, but I'm really eyeing up buying quite a bit more for the fourth quarter, and that is the JETS ETF. And so the JETS ETF, it's the only real airline industry ETF that's out there. And so the ticker for it is JETS, it's JETS. Has an expense ratio of 0.6, so it's not amazing for an expense ratio, but it's somewhere probably middle of the road for that. There's a couple of reasons why I'm really focusing on the airlines. I think if you look at all of the industries that have gotten battered and beaten down since COVID began back a year and a half ago or so, the airline industry certainly took a beating. But when you look at the fundamentals of some of the airlines, I think that there still is quite a bit of hope on them, especially considering that airline travel as a whole is expected to grow quite a bit over the next 5 or 10 years. So this is not a short-term play. This isn't a 6-month investment or even a year investment. This is something that I'm looking for a long span of at least 5 or even 10 years from now when airline travel is really booming. The reason why I like to invest into the airline industry through an ETF rather than picking individual stocks, because people would say, Nate, why don't you just buy Delta stock? Or I heard Southwest is a great company, or why don't you buy Spirit Airlines stock? Instead of doing that, I choose to go for an ETF for this sector. And there's 2 reasons for this. One, because it's a really competitive sector, and a lot of companies can end up going belly up pretty quick in the airline industry. If you've followed it and studied it for a while, you'll know that there's a decent turnover rate in the airline industry. But also more importantly is that I don't like to spend too much time analyzing individual companies. I will talk about another individual company later on in this video that I'm investing into, but I don't like to spend too much time analyzing individual companies. So I think the top holdings for the JETS ETF, it's like American Airlines, it's Delta Airlines, they own Southwest, and they have their hands in most other airlines in the USA and also throughout the world. And so this gives me broad exposure to the entire industry rather than trying to pick selective ones. Because then you have to listen to the earnings report, you have to be following along, you have to, there's a lot more involved with that. It's more time intensive if you're investing into individual companies. So I'm banking on the entire airline industry as a whole. There's some other factors as well, like when there's more fear, where people have fear about the Delta variant, or they have fear about this new Mu thing that I see. We'll see how this video ages, but people are pretty scared of it, and so airline travel has been slowing down even more now, and so I think sometimes one of the best times to buy is when people are running away from something. Now that's not to go and say that all the airlines are going to come out of this just fine. I think there are going to be some airlines that a couple years from now are going to really start feeling the effects of what happened in 2020 and in 2021 when they had to start issuing bonds at these high coupon rates, or issuing new shares and watering down their stock. That certainly does happen. But if you look at the overall price per share on JETS ETF, it's sitting around $22.80 or so, off of its highs that were up in the mid-30s at one point back in 2019 and early 2020. So I think between all of these sectors, all of the industries, the airlines still have the best position, in my opinion, for a decent amount of growth 5 to 10 years from now. That's just an opinion. So, you certainly please do not go out and buy this simply because I'm considering buying it. Like I said, I do own some Jets ETF, and I'm not buying at the $22 level, but I have limit buy orders placed for right around the $20.50, and then also below that at around $19.75 buy orders placed for that for some decent quantities on that ETF. All right, so we just talked about how I don't like spending too much time looking at specific companies, and that kind of leads me into my next biggest investment that I'm really focusing on, which is passive investments in index funds, various ETFs, and I do this through Wealthfront. So it's actually the sponsor for today's video. I reached out to them because it felt like a perfect spot to talk about this. I personally use Wealthfront, so I want to explain exactly what it is and why I think it's such a great service. All right, so the best part about Wealthfront is that it allows you to passively invest into the markets, which can save you so much time and so much headache from trying to figure out what to invest into. And one of the top things that holds people back from investing is that they feel like they just don't know what they're doing and they're hoping for some type of guidance. So instead of trying to handpick stocks, you can let Wealthfront do the heavy lifting for you by diversifying your investments into asset classes of your choice based off of your risk tolerance. And so besides this easy to use interface, one of my favorite features about Wealthfront is their tax loss harvesting that they offer. So for a very minimal fee of 0.25% annually and an account minimum of just $500, you can get started investing with Wealthfront. Now, I quickly want to take you in to look at their product demo that they put together so that I can show you the interface and the functionality of the platform. So this is what it may look like inside of the Wealthfront dashboard, and I just want to show you some of the different features that they have available. And so you can see, various different account balances, but what I think is really cool about this is that you can set different types of goals. Maybe perhaps somebody wanted to buy a house at a certain age, and so you can set that goal, and you can see sort of, some different financial metrics and projections and ideas of sort of what you might be able to afford. If you wanted a large house, maybe it's unaffordable, maybe it's a stretch. And so it kind of helps you get a better picture of your overall financial position that you might be in. And I think that's one of the best features. Maybe you wanted to send your kid to college, you wanted to save up for that. You can put that in there. And you can set up different things as well, like an emergency fund or maybe a wedding fund. So they give you quite a bit of flexibility on that, on different types of accounts that you want to set up and different types of goals that you want to set up. All right, so if we take a look at our individual investment account, we see some pretty cool features like our time-weighted returns, dividends, estimated taxes saved, and the Wealthfront fees that we've paid so far. And we can go through and we can take a look at our current portfolio. We can edit that portfolio. We can change some of the numbers here. We can add more investments. We can see what the recommendations are, if we want more or less risk, depending on a number of different factors. And then we can actually edit, maybe we want more exposure to one specific sector than another. We can go through and we can customize that, which I think is really, really cool. So thank you to Wealthfront for sponsoring this portion of the video. I really think it's a great service. Like I said, I personally use it, and so I will leave a link to it down below. You get the first $5,000 managed for free. So thanks to Wealthfront for sponsoring this video, and let's continue on to the next investment. All right, so this next investment, I was debating whether I should even include it in this list, but truth be told, it's made me more money this year than my passive investments have. So I figured I should probably include it in some of my top investments for this year. And that is doing quite a bit more technical analysis and swing trading and sometimes even day trading to take advantage of certain technical setups where you can benefit quite a bit. And so it just so happens that a lot of this has actually happened in the meme stock market, which just sounds pretty stupid. I can't imagine me looking forward 3 years ago and thinking about what I'd be saying, talking about how I'm putting money into meme stocks. Now, I want to be very careful with how I word this because this is very different from gambling. If you understand technical setups and you understand how certain things can break out, then you can end up making quite a bit of money. And so it's something that I've been doing a lot more. And this is especially because we're in this big bubbly point in the markets, and not just in the stock market, but in pretty much everything. Crypto, real estate, I mean, almost any type of asset class in 2021 going into 2022 is up a lot in the past couple of years. And we're at the point where people are paying millions of dollars for a picture of a rock as an NFT. We're at the point where, we're seeing certain cryptocurrencies, the 100x in a day. And we're seeing stocks like AMC go from $3 a share to almost $70 a share back in the spring. And so you can take advantage of some of those certain situations if you understand momentum, if you understand how people operate. So it's really not using a lot of fundamentals. It's simply looking at how people operate. I'll give you an example of something that I've done with this. It was almost exactly a year ago, I loaded up quite a bit on Bitcoin and Ethereum, and it was simply because it was starting to approach its all-time highs, but it hadn't yet hit the news. CNBC, CNN, all the news companies, they haven't made any news articles about Bitcoin a year ago. And so it was very obvious that it was gaining momentum, it was picking up steam, it was about to hit its all-time highs again, but nobody was talking about it. And so figured as soon as people start talking about it, boom, everybody's gonna start piling on. You got FOMO. So as long as you're on the right side of it and you know when to sell, you're gonna end up making money, okay? So I had to include it in this because I have been doing that a bit, and there's times when you can make a lot, there's times when you can lose a lot. I don't want to sit here and act like I'm some type of genius and that I make tons of money by swing trading and day trading certain stocks, because I've certainly lost quite a bit of money as well. But overall, it's been a pretty big net positive on the year, so I figured I should probably included in this video. Now, let's talk about a stock now for the fourth investment that I'm focusing on that is really much more based off of fundamentals, and that is Walmart stock. So I've gotten a lot of mixed opinions and views about Walmart stock. A lot of people, when they think about retailers, they tend to gravitate towards Amazon. It just seems like the one that has the best trajectory, the best potential growth in the future. But I want to share why I like Walmart as a company, why I am an investor in the company, and why I feel very safe with the company. Now, first off, it's pretty likely that it's not going to be the stock that's going to 10x in a year. It's not going to be the next Tesla. They have a market cap that's already over $400 billion, and it's not going to be this massive fast growth company. So once you understand that, if you look at the fundamentals, they're extremely healthy. Walmart's been innovating a lot more than what people give them credit for. I think this is really where they become overlooked. If you look at their PE, it's relatively low compared to a lot of other companies. If you look at the total amount of cash flow that they're bringing in, if you look at the revenue that they're pulling in, it is absolutely enormous. But I think what's more important about all of this is that it's one of the safest hedges against recessions or even inflation. And this is why I really like it. Now, I don't know what your views are on inflation and where you believe inflation will be looking like in a year or 2 or 5 from now. I certainly know that most economists say that they believe inflation will sort of come to a head in quarter 4, and then it'll slow down, and it's sort of this transitionary period. You've probably heard a lot of people saying, like Jerome Powell saying, inflation right now, it's transitionary inflation. Don't worry about it. It's going to calm down in a few more months. If you don't believe that's really the case, if you think that's going to continue, maybe even spiral a little bit out of control, I don't know if that's going to be the case, but I certainly like to make sure that I'm hedged against it a little bit. Then I like to focus on cash-producing businesses. And this is why I like to focus on cash-producing businesses, because if you are investing into companies that have these growth multiples that are, a PE ratio of 100 or 500 or 1,000, the only problem that I have with this, take Tesla, for example, which obviously great company, right? I mean, they're changing the world. But if a company has a PE ratio of 1,000, and it has so much of future earnings factored into its current stock price, if you see inflation run pretty rampant, or you see inflation start to really tick up quite a bit, those stocks with the higher PE ratios, those stocks with the higher growth multiples, are likely going to be negatively affected more than the companies that are really focused on just producing cash, that are pumping out cash right now at the moment. Now, you could certainly argue against that. You could argue both sides of that story. It's the reason why Michael Burry actually shorted ARK, the ARK ETF, because he thinks inflation is going to be climbing. So that was one of his ideas behind that. But look, it's one of the hedges for me to focus right now in this market when everything's so overvalued. I'm focusing on those businesses that are pumping out cash right now, and I feel very safe with Walmart. And I could probably go on for 15 minutes talking about all the different types of innovation that they have. 56% of their sales are coming from food and groceries, and people are always going to need food and groceries. And also, when inflation ticks up, food and groceries is one of the best ways for some of these retail companies to actually increase their margins quite a bit, especially if it goes up and then comes down a little bit, and then they can just keep those prices higher. It's a tactic that companies have been using for many, many decades. Now, on top of that, I just want to give one more reason why I really like Walmart, and please do not go out and buy this simply because I'm talking about it in this video. But Walmart, look, it's the backbone of America. I mean, it truly, really is. When I think of America, I think of Walmart. And there's so many people who go to Walmart, shop at Walmart, who are now using it for their finances, right? There's people who are using it for their pharmacy. There's people who are using it obviously for their groceries, but it's really becoming the everything store. It's very difficult for anybody else to compete with them. Obviously, Amazon is trying to compete with that. But just recently, Walmart has now outpaced Amazon for food deliveries. So Walmart delivers a hell of a lot more food than Amazon delivers. Amazon lost a lot of steam with that. Not saying I'm bearish on Amazon. It's probably going to be incredibly successful. It's killing it right now. But I just think people are sleeping on Walmart a lot more than they are on Amazon. So the fifth investment that I'm focusing on is simply by staking my crypto. So I don't know if you're invested into cryptocurrency. A lot of people are these days. But I don't day trade that. I don't swing trade crypto. I'm in it very much for the long run, and I do a lot of dollar cost averaging into certain types of cryptocurrencies. And so what I have to say about this is that what I started doing is staking my crypto. And so you can get, depending on the type of currency, you can get anywhere between 5 and 15% APR on these cryptos by staking them. And I don't know how in-depth we should go on staking in this video, but essentially instead of mining, you can stake, and it's proof of, yeah. So we'll skip over that. But it's sort of just as a reminder to people, if you're holding cryptocurrency for the long term, then consider staking. I have some friends who do quite a bit of DeFi with what they do with stable coins. It's pretty interesting and intricate, their setups and their systems for it, where they can essentially get a pretty decent yield by parking money in certain types of stable coins and staking them. So I just wanted to share that with you. I'm doing that a little bit more this year. It just kind of seems like a no-brainer, especially because my crypto was just sitting in cold storage before that, so might as well make an extra 10% off of that every year if I can. So those are some of the investments that I'm focusing on for this year. Obviously, real estate as well is another one, but I feel like I mentioned that so many times that I didn't want to really bring it up in this video. So thanks for watching the video, and of course, thank you to Wealthfront for sponsoring this video. If you guys want to check out Wealthfront, go ahead down into the description, click on the link, and you can sign up and get your first $5,000 managed for free. So thanks, Wealthfront, for sponsoring this video, and thank you for watching this video. I think we're going to make a video next week. So see everybody next time.